Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Meghan Grebner. With us is Scott Brown with the University of Missouri. Good afternoon, Scott.
Good afternoon, Megan.
To kick things off this week, let's talk a little bit about what's been going on in the livestock markets and some maybe notables that we should keep in mind.
Yeah, I think when you look at livestock markets again this week, I feel like I've been a broken record here for the last several weeks in a row. We are talking about lower prices yet again. Cash hogs down roughly $1 from where we started the week. Chicken prices much lower, so we've seen a pretty large downward trend in chicken prices. Last week's composite wholesale chicken price was the lowest since December of 2007. Feeder steers also off another $4 to $10 this week. Some instances where we've heard even heavier weight calves moving down more. Box beef prices a little lower this week, as was the pork cutout. So again, and when you look at current markets, we've certainly been in a trend of lower prices the last several weeks now.
Let's talk a little bit. We saw Hurricane Matthew come through last week. We saw Smithfield shut down as a preventative measure. We've seen some losses in the livestock industry. How does that come into play when we're looking at markets, not necessarily this week, but in the next coming weeks?
Yeah, so I think we're going to have to play a little bit of catch up. When you look at the data from USDA, we were down about 50,000 head as a result of those plants closing, and those 50,000 head don't magically disappear. It means we had any bigger runs coming down the road. So I think all in all, that's not positive. I think when you look at the plants that were in the way of Hurricane Matthew, most of those plants haven't suffered any damage, but getting hogs to those plants and getting people to those plants, I think certainly was a problem as a result of the hurricane. But again, it just, as we look at the latter part of 2016, we don't need anything to keep bunching runs up in these last few weeks that we have left here in 2016.
And as we look at what that Smithfield plant had, the kill on that was what, around 30,000 head a day?
I believe that's correct, Megan. Yeah, so again, it's a plant that we need all plants operating at full capacity between now and the end of the year if we want to avoid some much lower hog prices as we potentially run out of shackle space.
Some of the other things coming up this week, the WASI report was released from USDA. As we look at that, we've got to be thinking, or I would assume livestock producers are looking at that as a relation to those input costs and feed costs as we're watching these lower.
Yeah, absolutely. I think, we got that WASI report. We did get some lower corn yields off of, I believe, a bushel relative to where we were the month earlier, but we also picked up a few corn acres in that report as well. So in net, not that much of a change. If you look at what markets have done on the feed cost side, yes, we've been higher, about 15 cents for the week on corn prices. So we're not getting the same help that we used to talk about in terms of lower feed costs. We're actually getting them moving in the other direction. WASI is also important when we start thinking about what's happening on the livestock side. USDA is revising lower their projections for cattle and hog prices as they move through 2016. So getting no help on that front as well is kind of what we see out of the latest WASI report, and especially as we look ahead into 2017.
Scott, as we talk about reports, the consumer sentiment report came out or the most recent consumer sentiment report was released. Not really great either.
Yeah, not so much good news. That index down about 3.6% month over month, so lower. If you look at the current economic conditions, those were actually slightly up in the report, about 1.2%. But the index of expectations is the one that took a tumble down about 7%. And so looking ahead, I worry about what consumers see. I do think we're continuing to see those in the lower income classes are the ones with the lower consumer sentiment. That may play into some of the higher quality meat cuts have maybe fared a little better than the low quality meat cuts that we've seen in this country. that data certainly suggests consumers in those lower income groups are the ones that are struggling the most with sentiment as they look ahead.
Scott, when we look at that sentiment or that index number, why is it something that producers need to keep in mind and maybe turn to or think about when it comes to maybe risk management or even planning?
Yeah, absolutely. I always go, that spigot on the supply side seems to be wide open these days and almost broken in terms of trying to get that valve to slow down. And as you put more meat on the market, ultimately it's what consumer demand for that meat looks like that's really important. And so I do think it's important to pay attention when you see those signs of lower consumer sentiment ahead. Perhaps that's the demand side of the picture that we really don't want to see whenever we're talking about record meat supplies or much larger meat supplies facing us here in the last quarter of 2016. So I think that's one of the few things that we have to be looking ahead in terms of what are consumers really thinking about when they make those meat buys or go out to eat at local restaurants. And if that lower consumer sentiment plays out as we move ahead, it is concerning about what it means for domestic demand for meat products in this country.
Scott, we talk an awful lot about how things are going to end up in 2016, especially in terms of shackle space or how things look ahead for this last quarter. Is it time to start thinking about 2017 and maybe a quick glimpse of what's in store for producers for next year?
Yes, I think it is, because we can find plenty of negative things to talk about as 2016 has unfolded in all of these markets. I sometimes like to start back. If you look at WASI and the projections for 2017 that USDA is making on the livestock side, I'll take cattle in particular. So we're below $1 a pound on fed cattle today. Yet USDA is suggesting annual average in 2017 of $1.12 to $1.21. Well, so that means we have to get some upward movement from where we are today, and I think seasonally we'll certainly see that. Again, I'm not saying USDA is overly optimistic in that forecast. They have been coming down as they've looked at 2017, but I think they're somewhat in the ballpark. So yes, it's been a tough 18 months or so in cattle markets, but maybe in 2017 we start to see some bottom form. I think a lot of folks have been waiting for that bottom to form for a long time, but 2017 may be that. And in the same breath, as you look at hog prices, yes, USDA again adjusting those down in 2017, but I think as we come out of this fourth quarter of 2016, we potentially get more processing capacity on board. There's a lot that I think could maybe make 2017 look a little better than 2016, but let's not overstate how far we can move higher given what we've seen this year.
If we're going to stay on the optimistic trail, is there increased opportunity for trade for 2017 to help producers find increase exports and find a place for the product?
Yeah, I believe so. So USDA's Foreign Ag Service did turn out this week as well some updated estimates for 2017. I guess as we kind of look across the board, I would say on the pork side, USDA is suggesting that the U.S. can increase pork exports in 2017. I think much of that lies in terms of what China does in front of us in terms of importing product. USDA does say fairly flat for China, but I think it gives us an opportunity to get some market share there that we didn't have in 2016. Higher beef exports out of the United States for 2017 seems to be in the cards. There, I think it's as much looking at countries like Australia, where beef exports out of Australia have been down tremendously. As number one, they're trying to rebuild the herd, but number two, coming out of some pretty dry weather events there that I think is helpful for us. And higher chicken trade as well, potentially in the cards as we look ahead in 2017. I guess the one that I keep paying attention to at this point is Brazil. They've certainly been very good at competing in some of these markets with us. And when you look at their exchange rate relative to us, I think it's made their product pretty competitive in some markets over the last couple of years.
I would assume that means we're also keeping an eye on what happens with the U.S. dollar in terms of trade and exports and the whole global marketplace.
Absolutely. If we get strengthening of the U.S. dollar, we can certainly come back and revise downward, I believe, our estimates of the ability to export more products. I guess as we've looked in 2016, the good news is we haven't strengthened more relative to what we did in 2015. So maybe the news is at least we've stopped that strengthening, and hopefully that continues well into 2017.
Scott, Cattle on Feed is next Friday. Any thoughts ahead of that, and maybe some things that we need to watch for next week in next week's report?
I sure hope we start to see some signs that maybe we can get in this last month or two of 2016 with some news of lower numbers perhaps ahead in terms of placement growth and on feed. I don't think we're done with the growth that we're seeing there, but maybe we can at least start to see the light at the end of the tunnel, if you will. So we'll wait and see. It's going to be a good indication, again, what we end up with as we get in late 2016 and then early 2017 in terms of cattle slaughter runs.
Well, we'll see what comes out next Friday. Scott, good to see you.
Great to see you as well, Megan.
To have our weekly livestock market update sent and delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com, and click subscribe. And now, if you have questions for Scott, you can submit them online to us there, and we'll ask them for you each Friday. I'm Megan Grebner on Brownfield.